research analyst, metals and power at Axis Securities. Aditya, great having you. Let me start off first by trying to understand this. What does this mean for the sector as a whole, Aditya, and who will benefit disproportionately among all the steel makers, in your opinion?
Yeah, good morning.
Good morning.
So this is a welcome news. Sector as a whole will beneficiate from this, and mostly all the large steel players who have exposure of flat steel. So all the major steel players will get a benefit because this removes a kind of overhang of cheaper dumping of Chinese steel imports into India. So now, currently, if you see, without the safeguard duty, post the expiry of the provisional 200 days safeguard duty, Indian steel was trading at 5% discount to the landed HRC, Chinese HRC prices. And with almost 12% safeguard duty, that discount jumps to 14%. So that gives some protection to the Indian steel mills to raise HRC prices and other flat product prices. So we have to see it in that perspective.
Aditya, but if you look at the steel prices as a whole, they've been very lukewarm in this calendar year. And do you see enough demand getting generated for the product as well? Because the industry was anyways getting protected because of the rupee depreciation which was coming in.
Yes, that's a right question. If you see globally, India is the only bright spot in terms of steel consumption. Our steel consumption has been growing in lower double digits, and in the 8 months of this fiscal, the steel consumption growth has come down to 8%. But that is still very strong growth as compared to rest of the world. However, the issue what has happened is that in Q2 FY26 onwards, there was some new steel capacities which have come up, and production have also grown at 11%. So there was abundant steel available to supply the very strong demand, and at the same time, exports are not very. The exports outlook is not very good. That is because of the CBAM, that is Carbon Border Adjustment Mechanism, coming in Europe. So Europe is one of the major destinations for exports. So the exports is not expected to pick up. So in this backdrop, this safeguard duty imposition is kind of a positive news for the entire sector.
Aditya, I also want to talk about the whole volume versus price growth debate, right? Because I remember you had previously mentioned that steel companies might need to rely on volume expansion rather than price hikes because of significant domestic capacity additions. Tell me, how does this long-term safeguard duty now change your thesis on volume versus price growth for companies like, say, a Tata Steel and a JSW?
So the thesis stays because, as we have been discussing, that we don't expect that the steel prices will rise substantially from this level, despite the imposition of the safeguard duty, because the reasons that the steel mills are coming up with more and more capacity. So there is an abundant supply of steel, although the steel demand is very strong, and then exports avenue are shrinking. So in that perspective, the steel prices will not, even after the safeguard duty, the prices may not rise to a level which we have seen in previous years. So in that context, the steel volumes will be the major growth driver for all these steel companies. And almost all these major steel players, they are expanding their footprint in India, especially. And in the coming few years, all these steel players will be aligning their new capacities, and the steel volumes will grow. So even if the steel prices remains flat or rise slightly, the earnings will be driven by the steel volumes, additional steel volumes. So that is how you have to look at the earnings trajectory.
Aditya, how expected was this?
This was basically clouding the outlook for the entire sector, because if the imposition was not done, then it would have been a dampener for the entire sector, and this was unexpected. Although the the ministry was iterating that they will go ahead and take a decision, but at one point of time it was felt that maybe because recently we have seen that many BIS standards and quality standards were eased by the government. So in that context, this news is a welcome news.
But, talking about the diversion of trade flows, Aditya, with countries like US, South Korea, Vietnam, also tightening their own, trade defenses against Chinese steel, do you think the 12% duty for India may actually be enough?
Uh, See, if we put a 12% safeguard, then as of today, the Indian steel prices will be trading at almost 14% discount to the landed steel prices. So 14% is a big gap. So as of now, it looks fine. But if the steel bills go ahead and hike their steel prices, then that gap will shrink. So that is a case of another debate. But so far, so good. The probability of diversion from cheaper imports from China will increase further because of the imposition of the carbon border adjustment mechanism in Europe and all these safeguard measures taken by other countries. So I think government have taken that into cognizance, and based on that, they have taken this judgment today. But whatever we have, I think so far it is so good.
Okay, thank you so much, Aditya, for joining us and giving us that perspective. I really appreciate you coming at short notice and speaking with us. Thanks.